I think the first thing is almost everybody's underweighted China. So if you look by any of the benchmarks relative to world capitalization.
That was Ray Dalio, one of the world's most successful investors, in late 2020 lamenting the untapped opportunities that the unloved Chinese markets offer. Dalio is one of the most well-known bulls on China. However, recent events have proven the market's bearish sentiment on China is correct. The country's real estate sector and banking system are shaking, and a collapse of these pillars of the Chinese economy will impact the entire world. In mid-July 2022, as many as 400,000 Chinese citizens witnessed their bank deposits freeze across the country. When depositors went to the ATM to withdraw their money, their withdrawals were simply declined, as almost $6 billion worth of deposits froze up. Following this drastic event, hundreds of thousands of Chinese homebuyers refused to pay up to $300 billion worth of mortgages. According to a crowdsourced document seen by multiple newspapers, mortgage payments have reportedly stopped on a shocking 301 projects in 91 cities. Many investors fear that China is experiencing a repeat of the 2008 recession, but on a whole new level. The writing's on the wall. The British newspaper The Guardian reported that a rare, large-scale protest in China's central Henan province has been violently broken up by unidentified security personnel, amid outcry over a financial scandal that has exposed the fragility of the country's banking system. While the bank freeze only occurred within 5 different banks, according to the Chinese government, hundreds of other Chinese banks are also at risk. Principally, this is the case because of the interconnectedness of the banking system. Like in the Western world, Chinese banks communicate with each other in the interbank system, settling transactions through the central bank, the PBOC, or People's Bank of China. Without strong assurance from the PBOC, if a bank large enough, or a group of smaller banks, remains without sufficient liquidity, as happened with Lehman Brothers, the US bank that collapsed in 2007-2008, then the interbank market freezes and the financial system collapses. However, this is not the only issue facing one of the most important economies in the world. Unfinished homes in China amount to 225 million square meters, 2.4 billion square feet of space, Bloomberg News reported. Moreover, there are reports that about 300 million square footage of property construction has been halted. Local governments across China can no longer withstand the pain. A 200 to 300 billion yuan property fund has been rumored to not be enough to support China's real estate sector. Property sales are down 20% and likely to drop by 30% this year, according to analysis by S&P. Construction starts are also down by 30%. To add to the growing list of pains inflicted upon Chinese real estate industry, which is a major contributor to the country's GDP growth, the recent mortgage revolt is another massive red flag for investors and consumers across the world. Anger with the way the Chinese economy has been managed led to many Chinese homebuyers to refuse to pay their mortgages. The fundamental issue is that we have reached a turning point in the housing market in China, said Julian Evans Pritchard, a senior China economist at Capital Economics, in a recent BBC interview. As Chinese homebuyers are refusing to pay their mortgages, financial regulators have created a proposal to allow citizens to pause their mortgage payments. The amount of unpaid mortgage payments equals to about 2 trillion yuan or $300 billion US. 5 banks have already gone bankrupt, which will spread into 10 banks, then 100, and eventually the entire banking system. The regulators need to do something about the mounting crisis before it's too late. But what can be done? Backstop the entire banking system? Bail out the real estate sector? How will the delivering look like? Legendary hedge fund manager Ray Dalio, who has made his views on China's role in the world clear in a number of publications, weighs on these issues in a recent interview with Larry Summers, a former Treasury Secretary.
I've been through 5 major debt crises in the United States when we couldn't pay our bills. And I know that we know about debt restructuring and if the debt is in your currency and how you can deal with that. And I'm not arguing one way or another. I'm saying that that can't be taken, and hope is not a strategy, that being strong yourself and us doing the first 2 things right is very, very important. So I don't think we can hope. We have to deal with the elements of the realities. I would say like even the biggest question is a political question. If people work well with each other and they operate where they're doing the finances right and they don't get into a war, then I think that they could be productive, and if they don't. So in any case, it's a test of our systems.
The question is, however, does China know enough about debt restructuring to get itself out of this mess? Dalio has been a long-time bull on China, having argued in the past, despite the increasing confrontation between the US and China over international trade, the latter remains an attractive destination for foreign capital. Indeed, Dalio's perspective is an interesting take. Would you not have wanted to invest with the Dutch in the Dutch Empire? Would you not have wanted to invest in the Industrial Revolution and the British Empire? Would you have not wanted to invest with the United States? I think it's comparable. Would you have not wanted to invest in those places? Dalio said in 2019 for the Financial Times. The newspaper also reported that same year that the billionaire hedge fund manager has been a China bull for decades and has repeatedly pointed to growth opportunities there. Bridgewater opened its first office outside of Connecticut in Beijing in 2011 to be closer to clients there. Although it was not until more recently that the Chinese market opened up to allow foreign investors to launch onshore funds. Bridgewater launched an onshore fund investing in Chinese securities last year. Meanwhile, in 2021, Dalio launched what is believed to be the single biggest fundraising in China at the time, collecting the equivalent of $1.25 billion from Chinese investors and eclipsing a rival offering from BlackRock, the world's largest asset manager. However, in recent days, the hedge fund manager has sold his stakes in the e-commerce Chinese giant Alibaba. Is this a signal for other investors that the troubles plaguing the Chinese economy and markets are scaring away even its strongest supporters? Cathie Wood, CEO and CIO of ARK Invest, believes that China's collapse has already happened, and we are about to witness the aftermath. In a recent interview, Wood stated,
"So much is going on in China that, again, the headlines are getting some of this, but within 1 week, a Bloomberg journalist, Sofia Horta Acosta, reported that all of this happened in Greater China this week." I'm going to just read you a few of these to give you a sense of the drama here. Evergrande suspends trading on the stock exchange. And the developer, Evergrande, was ordered, think about this, to demolish 39 illegal buildings because they didn't have the right permits. Can you imagine if that happened in the United States? The 100 largest developers in China reported that their contracted sales were down 35% in December. And for the year as a whole, they fell for the first time, Sophia says, in at least 5 years. I don't think I've ever seen them fall in the last 20 years. So real change. A few of the other developers went bust. Shimao, which was rated investment grade in November, defaulted on a trust product and rocked the credit market. And the central bank withdrew liquidity. A lot of people thought they were going to increase liquidity because they said they would. A China regulator vowed stability after stock market's rocky start, but they haven't done anything about it yet. And very interestingly, the yuan, the RMB, the local currency, after a very strong year, held up. And I think it held up probably helped by the government, supported by the government. It is starting to weaken. Quite a telltale sign. And one stock, Hurong, which had not traded since last March, opened this week and dropped 50%.
The sentiment towards China is already turning increasingly bearish. Negativity is all over the news. Economists worldwide know that China's recent social unrest is a signal of massive issues inside the Chinese economy. A banking crisis, a meltdown in its real estate sector, and a myriad of other social and political forces are strong headwinds on the Chinese economy. Will this combination of issues bring the red dragon to its knees? Let us know your thoughts in the comment section. If you want to see more content like this, make sure you like this video, subscribe to our channel, and hit the bell icon for future updates. See you in the next video.